All right, welcome everybody to the stream. Of course, yes, it's Wednesday night here in Australia, and I'm telling you what, Ty, it's the middle of the week. We're feeling good. We're feeling ready to smash these markets. Are you ready, though, to find out what technical analysis we have today?
We're definitely ready. Is everybody else ready? I certainly hope so. I think they are, and I think we're ready to go. So I think there's good movements. We've got a lot to get through. A lot of currency stuff tonight, I think. That's currencies seem to be where it's at. So yeah, we'll jump straight in and start checking it all out, eh?
Yeah, some currency work. Obviously, we'll be going through the indices. We're talking about this SP500 monster move that we've seen over the last 5 days. We're talking about the Nasdaq, bit of crypto, bit of natural gas. We're going to do natural gas today for somebody that asked about it. And of course, we've got the commodities.
Maybe a bit of gold.
Yeah, we could do some gold. Why not? We'll start here with the dollar index, though, and then we'll get into the indices about halfway through. Thank you so much for joining us. If you can smash that like button, it does help us out. Remember that it seems to help with the algorithm. So do it if you like the streams, if you like what we're doing. And obviously, a big shout out and welcome to the private community as well. Now, weekly on the dollar index, Ty. We've got long leg doji. We have a rejection, 94.50, such a critical zone. And now we're in the middle of the area. So basically, the dollar index isn't giving us a significant level of strength or weakness, at least on the weekly at this stage. But we do know how important this 94.50 is going to be. And I guess I really haven't changed our outlook. I think that we still are looking for strength here in the DXY. It's just that so many people were looking for it. It's going to beat them out of them. Yeah, Ty? Is that right? It's going to beat it out of them.
Yeah, that's right. But I mean, it's done nothing to change our minds. At the end of the day, it's still going higher highs and higher lows. So, and the 20's trying to support it. So nothing doing here. Nothing but long.
Yeah, it's at this stage. Well, I mean, if we're looking at this daily, you wouldn't necessarily.
Well, yeah, you look at it. I mean, at the end of the day, it's right. Like you look at the daily, and all it is long. Now the 4 hour, yeah, I mean, in the 8 hours, they're kind of screwing around in a bit of a channel and making a couple of lower highs and lower lows. But it's got a lot of work to do before it actually breaks lower on the daily. And we're not going to be convinced it's going short properly until it does that. And if it does that, we'll change on a dime and we'll be shorting the hell out of it. But for now, all we see is rejection candles, the 20 holding it up, and it's still technically making higher highs and higher lows. And while it's doing that, that's why we apply these rules. So we don't have to think about it. We don't have to look at that and say, "Oh, is it going short now?" Simple answer: no, it's not.
So I think the thing here as well is maybe a break above this previous rejection, get above there, close. I think then seems like it's going to go test that 94.50 because what you're probably doing there is doing this, which would be a lightning bolt off this bottom. Let's say the 4 hour, something like that. Close above, get to the 94.50, get above 94.50 and resumption. I think at that point, you're really going to see that really big power of the DXY should it occur. So don't
if it occurs, it's going to be big power up if it occurs. And if it goes down, you know what? You're going to have just as much fun on the way down. Once it makes that lower high and lower low sequence on the daily as well. So I'm not fussed. I just think it's difficult to trade at the moment. I think it's one of those ones where you got to set your alert and say, all right, when it gets above here, we're going to do X. And if it goes below here, we're going to do Y. And I think that makes it easy, doesn't it?
Some people call this the tweezer tie. Is the tweezer style or something?
I think people just like making up names.
Yeah, they call it. They call it the tweezer on the euro.
It is a tweezer. It is a tweezer, but in all seriousness, it's price action rejecting off 200 twice, isn't it? What I want to see people do in the room is actually don't worry about fancy names for setups. Only deal with the names that we use for setup and actually call the candle for what it is. A candle reversing off a level. Because then what it will make you do is actually make you understand what that candle is actually doing, and it'll make you read the candle pattern rather than the fancy name that a pattern has. At the end of the day, a tweezer bottom is just two big rejections right in a row. So, but what's more important, knowing that it's a tweezer bottom or understanding that for two very serious periods, the buyers well and truly reversed everything the sellers threw at them. That's the important part of that pattern, no matter what it's called. So, really sort of focus on what the actual candle itself is doing, and it'll make you look at the market in a different way. I promise you it will.
I think this is one of the things we're looking at the moment. Daily 20 moving average, it's kind of hovering on that level. It tried to get through, failed, and it's really just kind of finding the resistance there. I think
just basically the reverse. It's just the reverse of the dollar index. The dollar index is sitting on the 20 on the daily, and this one's sitting just below it. So, like for mine, I think they're both good trades, but they're just not good trades just yet. I think you just have to wait a little bit longer to get the confirmation.
That's right. Do you want to step us through this US dollar yen?
The US dollar yen is at an extraordinary amount of resistance right now. Look at this. Look at those dates. I implore you to look at the dates on that chart, on that weekly chart. 2020, 19, 18, 17. Every year, it's touching this level, and it's found it very, very difficult to get through. So it's been an extraordinary move up. We know that, right? So, I mean, we don't have to be geniuses to work that out. But what we are noticing now is that it's at that level. We know that it's a very, very tough level for it to, I mean, could it go blasting through here? I mean, it could. Anything can happen. But the likelihood of that happening without some sort of a retrace is probably slim to, So what you want to be doing is obviously going down to the smaller time frames, understanding that, we're at a very strong resistance. And this is why we go to such a big time frame. Like we go to a weekly and you can see it. You look at it on a daily and it looks like it's the first time it's touched it.
You'll miss it, yeah.
Yeah, you could easily miss that level is probably one of the strongest resistance levels on the yen short of parity. So in recent time, right? So it's a very, very important level in that regard. Now, it doesn't mean it's not going to break through, but what it probably does mean is going to find a little bit of trouble here. And, you could be looking for a counter trend back to the 20. That's pretty much what you're looking for, really. Go to the smaller time frame, go to a 4 hour or 1 hour, look for that reversal change of trend, and you know exactly what you're going for. Is it doing it yet? Absolutely not. But they're the sort of signs that you're looking for to get that trade down. For me, in order for it to break up higher and keep going, it needs to get above this level. I would not take the first break. No way. I would be waiting for it to go up there and come back and test it from above. If it does that, then potentially, it could push up and really break that level once and for all. Hey, levels get broken eventually, but the more statistical trade will be that it will actually pull back to the 20 and find some sort of, or at least respect that resistance that's been in place for so long.
Yeah, resistance super major. And as you mentioned, the dates there, Ty, I highlighted on the charts, October were the big months. And if you notice, October, November, always hitting that resistance like clockwork, which is the big thing. So we talked about the yens over the last week. We obviously mentioned yens were probably the strongest trades, and they were the strongest trends, and they really maintained. I mean, things like the pound yen, if you got on that kind of movement, been a freight train basically up here, but they are starting to show the signs of, maybe the trend is slowing. This was, of course, the 2 hour powerhouse here. So 2 hour 20, 2 hour 20, 2 hour 20, 2 hour 20. We're at that point. You can notice the long leg doji here, closed above the long leg doji short. We probably continue up. So watch that one, indecision at this stage, but we closed below. All of a sudden, you're starting to say, well, decision made, maybe a bit of weakness here, back down into this support. So there are some maybe day trades, some scalps there that can be looked at. Most of the trading that I've seen people doing at the moment has been around session opens and following these yen trades. Ty, we had the New Zealand US dollar as well at a resistance. So let's bring that one up. So New Zealand US dollar, another one of the freight train style trades. And check out that daily. It's why it pays to go from the weekly to the daily to the next time frame. Because if you don't do that, you miss it.
Yeah, it actually answers the question that we've got in the room. It says, when do we use the weekly chart for our analysis of a directional time frame trend? Very, very rarely do we use a weekly for a directional time frame, because the weekly trend is just so big that everything gets kind of lost in it. Like even the daily kind of even a daily trend can get lost in a weekly. What we use the weekly for specifically is actually identifying really important changes in role reversal. That's what the most important thing on the weekly is, because it's the one that gives us the vision to know of levels that you just simply won't see on a daily. I very rarely look at a weekly trend and say, all right, I'm going to join that trend, because I just simply don't trade long enough. That's a very long-term view. In the stock market, different story, right? In the stock market, you're looking for those big, long-lasting trends that last 6, 12, 18 months. But in the currency markets, it's very difficult to trade for that amount of time without sort of taking early profits. So, yeah, weeklies are mainly for identifying the very strong support and resistance.
That's correct. And Sophia, we use so you use support resistance zones from the weekly. Yes. Yeah, 10 to in currencies is a little bit different. So you'll notice here this New Zealand, have we hit a key resistance? Absolutely. If you were in this trade, would people be taking profit and scaling at this zone? From a technical basis, yes. You also have to ask yourself a few questions, and this will get into our natural gas discussion a little bit later as well. How far away are you from standardized moving averages? Very aggressive run. It started to, no doubt that's moved further away than it should have from mean reversion. And when you're so far away from the daily 20, something's eventually got to give. Now, the best place to realize that's going to happen is at a key resistance.
Yeah.
Was this always the aim? Hell yeah, it was. And that's why I use the weekly. So a lot of these currencies, you'll notice US dollar yen hitting a resistance, hitting a technical take profit, New Zealand US dollar hitting a technical take profit, dollar index, sideways action, I guess you would say. And the other yens are all going to follow some of these majors. So we've got to be a bit careful there. Anything else that we're looking at? Of course, you can put in your requests now if you have a specific currency that you're looking at before we go into the commodities and stock indices, etc. But from my kind of view on the markets here, I mean, we've had a lot of aggressive trends. We've had some pretty good currency trading on certain pairs. And we've had some good breakouts and some good continuations and stuff. Here we've got the Euro odd, breaks underneath. You see the closure. There's no doubt that's a closure. These are all wicks. That's a closure. And then it just continuously dumps down after that. So there has been some good continuation. But for many people, this is tough to take, Ty. And I think that's because when they're looking at it, they can't believe that the trend can continue. But once it breaks the key level again, hey, it's back on to the next zone. The next zone's down here.
Most definitely. Bradley he said he just closed out his JPY pairs. He has absolutely killed the JP. He has owned the JPY. Literally, he's traded that since the double bottom that we identified about 3 weeks ago. I think he's made about 400 or 500 pips. I'm pretty sure. I'm not sure if he's been in and out or all of. So good job, Bradley. Good job for sticking to your guns, identifying a very, very key resistance level. And regardless of what it does now, you've read that and had the yen on the yo-yo. So good job on that. Very, very good job.
You've followed the trend and you've gone to completion, which makes perfect sense. And why you closed
and you
yesterday.
The rules. And that's all, and it's as simple as that. You know, it's
really
no one was surprised it was going there. We were talking about it for months. But sticking it out's a different story, and you did really well.
So for our view on the week ahead, it's maybe not the yens like we think it was last week, and it was. This week's actually going to be DXY, I feel. So the next 4 or 5 days up until the next webinar, we're hopefully going to see some directional change here from the DXY. It only takes 24 hours to get it started. So 94.50 still remains really important. Obviously, the support down here remains really important as well. Let's see that daily hold. And I also would like to look at 94.20, 94.17, whatever it is. If we close above, I think that's also significant for going and checking Euro pairs, New Zealand pairs, etc. A few people mentioned the odd. I'm loath to talk about the odd at this zone. We're at a resistance. Yes, I know it's trying to break out right now, but could it be false? A lot of the other pairs are going to need to close as well. So we're going to need to see the Euro really start to show strength. The New Zealand bust that high. You know, this is at resistance, no doubt.
Yeah.
But I don't know, guys. It could be false.
Well, look at the volume drop.
Yeah, even the last couple of days.
Yeah, I mean the volume's going down as the price is going up, and I know that's only a very small indicator because we're only talking about one particular broker, but it's one of the biggest ones, so it needs to be Look, it's very similar to the New Zealand, right? For me, what this has to do before we start looking at potential longs again is it's got to break through, come and test it from above. It's the only thing that will convince us that it's going longer from here, and if it does, a happy days. Then we'll start trading it, but it's got a bit of work to do.
It's basically hit some TPs. And if you want to go back and do a little bit of research on a trade that I guess you could have taken over the last week, was this breakout here. And I think the 4 hour or 8 hour would have given you an okay entry. So when you got through this is basically a recovery style. And it's because in many ways, people will see this as an inverse. You got that really wide kind of compressed left shoulder, you got the head, you got the right shoulder. But more importantly than anything else, you've got this really strong level of resistance. and you break out above. And when you go back and you check out the daily here, what you'll notice is that we have an indecision. Well, we have a few good story pieces. We've got the story pieces of rejections. We've got the story piece of the indecision at this key level. And then we've got the decision made. At that point, you can go bullish into this area. So just remember, if you want to go and read the story, that's not a bad chart to read the story, because the story is compelling at that point. And again, if we had long leg doji and then we make a decision above, we might still look for the pullback, but then we'll be bullish. So
very different scenario if it does that.
The story is good. So gold, look, we'll go back over to gold and silver tie. We'll move over to these. I still think that probably this December concept, or at least back of November, December concept is best. Gold, you can tell the story is convoluted. Look at this weekly. Rejection, bullish, rejection, question mark. How do you read it from the weekly into the daily?
I'm just so fixated on gold going up in the first few weeks of December that I'm just loath to trade it in any way, shape, or form until then, because I think it's going to be messy. If the only way to trade it is to trade it on the smaller time frames and to scalp it. And I think that if you trade it between the 1800, 1750, and maybe even 1700, I think you're going to get some good lines drawn up. Basically, all those yellow lines, every one of them are going to be a support and resistance zone. So you just have to, I think, identify the time frame that you can trade and make sure that you can achieve what you need to achieve in that time. And that's all you can say about gold. I mean, it's, to me, I'm not seeing anything that I want to jump in and trade, but I can also see ideas where if you were doing the short, smaller time frames, absolutely, there are opportunities. But I think that it's a little bit messy. I think it's a little bit confused. I think it's just consolidating in quite a big range. So the only way to trade that consolidation on a small time frame, small enough that you can actually capture a reasonable amount of move scalp.
Yeah, basically you're looking for it to be range bound or have no true direction at this point, and therefore you might go, okay, I think from here to here is good based on my 10 minutes, based on my 15 minutes, 1 hour, whatever. Probably not even over an hour. It's just so convoluted. Let's take a look at silver, because that's been better.
If I was gonna butterfly gold, by the way, just to give the options people just a little bit of a taste of how
with
we
what type of options
like
though would we butterfly?
Sorry.
What type of options?
Well, we'll do a long butterfly, so we're going to trap it. I'd be selling probably the calls or puts. Makes no difference how you do it, really, how you set it up, as long as it's a long butterfly. I'd be selling the puts right in the middle around that 1750, and I'd be putting the wings of the butterfly probably one at 1700 and one at 1800. And I would probably have that butterfly out until the expected move, which is around the first week of December. If it's around the 1750, which is probably, that's what it looks like it wants to do at the moment, because it's just going sideways. It's going to be the best profit outcome for that butterfly. If it goes over 1800 or below 1700 in that time before at expiry, then it's no good. But that's what it wants to do. That's how we trade that. That's a butterfly trade, because it's caught within a big zone. The wings of the butterfly need to be at the places you don't expect it's going to go.
Now we go over to silver. It's a little bit of a different story, because if you look here, the downtrend in silver is actually being obliterated towards the buy side. We got the first stage of recovery here. I think that was whenever you break big downtrend and you actually have what many people will look at here in the 4 hour. I actually admittedly haven't looked at silver that much, but I can see it, and that is that you've got a clear compression style inverse. You've got a great breakout. It's actually an excellent trade there. I missed that. That's a very good trade.
I call this I have actually labeled those type of head and shoulders, an inverse head and shoulders. It's the rugby player head and shoulder. So effectively they got a head but very little neck. They got very little neck, very big broad shoulders. So the rugby style type inverse head and shoulder, although standard head and shoulder, because the reaction is a bit slower, in its own way can be powerful, because the time that the market considers all of that movement on both sides of the head, it's very, very long. So it's taking a long time to consider that level. That makes that level important. So when it does break out, you do get a very, that's a beautiful breakout, far up. That's
very
an awesome
good proof.
breakout.
Great proof.
Yeah, that's a really good breakout. Exactly right, guys. Yeah, thick necks, big shoulders and thick necks. So Mick T, I know you asked about silver. Are you long or short, or are you just thinking about it? Can you just pop it in the chat room just so we know? I know you.
That's a really nice bullish rejections here. Obviously, you've got moving averages, everywhere. 4 hour as well. 200 4-hour resistance becomes support. 20, 50 behind it. So much dynamic support. And look at the proof. Did you see the proof, Ty? I mean, I proofed it up. Holy crap!
Straight into
it. Look at that. Straight into it. Yeah. So it looks like it's got more bullishness to go here. Will it always work? Sure, probably won't. But the thing is that it's one of those things that it's a solid technical. And when you see solid technicals, you're going to go with them, aren't you?
Well, I learned something new tonight. Actually, I learned 2 new things tonight, Thomas. Let me tell you what they are. One, that our man Dave used to be a rugby player. Did not know that at all. So there you go. Our man Marvin the Martian.
Oh, really? I didn't know that.
A forward rugby player. Nice.
Really?
Okay. So, okay, that's one thing I learned. Also, tonight is actually my last webinar ever. Did I tell you that, Thomas? Because I got an email from Nigeria saying that I've inherited $100 million. So I no longer need to do webinars.
To deposit Bitcoin immediately.
All I've got to do is give them my bank account details and all of my Medicare details and all of the details.
So what you're telling us, Ty, is that you're going to say if you run Lotto, you wouldn't come into work next week. You wouldn't come and help me out with.
I'm pretty. If I won 100.
Or you're going to donate me so I don't have to come either.
I would take a couple of Wednesday nights off, I'd say. I'd come back in a month. But yeah, the Nigerian email is very, very excited. I've got $100 million on the way. All I've got to do is give them every single detail about me and I'm set. So they're the 2 things I learned tonight.
Fantastic. Well, there you go. You almost had me scared there for a second.
That is a warning, guys. Please look out for scams. The scams are getting
bad.
Literally, they're getting better and better and better, and they're tricking a lot of people. So always be really careful. Even in our room, it's a bit of a prelude to what's going on in our room. Actually, I know Thomas is going to talk about the Discord. People are pretending to be us. You guys know that we would not say anything in the line of
we don't have
getting rich quick, leaving our channel, going to WhatsApp. None of that. If you see that, report it to us. Don't believe it's obviously us. Even if you see the logo, it's not us. Okay, we would, you know what we're on about. If it sounds even remotely dodge, just let us know, okay? Or one of the admins know.
Yeah, just keep reporting them. We did have one that stole our icon and everything there. They're getting fancy on not only on YouTube, but they're rebranding themselves and stuff. Let's now go to US oil. So before we get into natural gas, we've got US oil here. The 4-hour 50 has come back down twice now. This is the 3rd time to touch. There is one small concern, which is that we have kind of a bit of a top base here. Some people might call that a little bit of a double top. It's valid. But at the same time, this 50 is still got potential to hold it up, plus all that previous resistance as well. So I think there's a little bit of what we would call, I don't even know, convoluted.
Yeah, and it is against the trend. Don't forget that is against the trend at double top too. So just be a bit careful there. I mean, it could definitely fall, but there's more reasons to wait. You are about to get that the smaller time frames. I don't like that either. No.
Yeah, so that's why you look at that double top and you look at this. Ooh, I mean, it's fairly compelling if the daily closes like this, Ty, towards actually getting that deeper pullback. I don't know if that 50, that's what I saw, and I went, ooh. I mean, I'm bullish oil, obviously, to the 86, over the medium term, and yeah, I need, if you're going to take something like this, you really need the bolt. You need the bolt.
Yeah, you do. Absolutely.
Don't go without the bolt.
Yeah. Absolutely. Dave says that, if FX Evolution is saying to sign up with Mr. Gideon, the trader extraordinaire, that's probably a scam. Absolutely. Yeah. You guys know. I know you guys are, yeah.
No one's surely been caught out by that, though.
No,
let's hope not.
Not in our group. We've only got smart people in our group.
That's right. Big brand. Weekly over here, Ty, we got the oil thing is basically, if you're going to take that 50, look for the switch. Otherwise, don't ignore the double wick rejection. That's a pretty big deal, what's going on there on the higher time frame. So natural gas. Now, I've been asked to talk about this a little bit, Ty, in some depth. And I think that you need to understand that a lot of these commodities, oil, natural gas, really any commodity, lumber, all these things, they often go into what we call like super cycles or super booms, and then they have busts. And we always say learn from the left-hand side what's going to probably happen in the future. And, you've had these booms in natural gas followed by busts, and they're quite prevalent. Like if we keep scrolling back here on the weekly, when it starts to get too far away from that 20 moving average, that mean reversion, it can really slam straight back into it. And we've had this quite a few times over the years. If we go back even to the previous times, look at these booms. The booms in natural gas caused by shortages most of the time, if you go back and look at history.
It's really interesting, isn't it? Yeah, when you look at it like that, yeah, it's really, really interesting.
And then we come back over here and we say, okay, well, what's going on? And it looks like it is weakening. Okay, it looks like it is weakening. So let's think of the story. Well, firstly, at the moment, we're pretty far away from the weekly 20. That's about 450. We are pulling back. I'm a little bit more bullish here on natural gas over the medium term, because I think that we are going into, in general, a big demand across the world due to, of course, the pandemic situation. And we're going into a little bit of resetting of some of these commodity prices, because gas was incredibly cheap for a long time. We will look at the daily. I'm not convinced either way here, Ty, while we stay stuck between the 50 and the 20 on the daily. The daily is a very significant time frame. We've got 550 and 5. Yeah. So they're very significant prices. While it's in here, I'm neutral. We close above or we close below 450, I believe. Above, we start putting pressure on 6. I think it's as simple as that in terms of 50 cents. Your thoughts?
Yep. And Stephen Robinson, that would be a straddle, by the way. If we were going to trade that one caught in that zone, it'd be a straddle. All right. So before you ask the question, it's a straddle. And yes, when you do meet us in person at the conference, you'll see that we are real. Thomas is not some, what do they call those bots, those artificial intelligence bots that they project now? They were doing that. They did it with the Beatles the other day. They had like the Beatles playing live with all of the members in holograms. They were like holograms. It was amazing, actually. It's incredible.
Soul Trio did that 10 years ago with technology.
Is that true?
Yeah, he projected himself in a board meeting and he said, "This is the technology that you never saw again."
Holograms, yeah. And Stephen, just for the room, I don't want to. Actually, someone made a lethal mistake on an options trade this week. I'm not going to mention their names, but Stephen, are you going to trade European or American options on that straddle?
Well, we'll see what he responds with in a minute. But basically, guys, whenever you're putting in lots of legs, try to go the European whenever possible. Yeah, because you can get executed accidentally by some crazy person out there that decides they want to take it. Now 555, yeah, that's where the trap is. 20 moving average, 50 moving average, close below, close above, and it's not incredibly significant, but that's the way we look at natural gas. Remember, the booms and the busts are fairly severe. And I do think we're in a bit of a bigger cycle. However, mean reversion is a thing on natural gas. At least it has done so in the past. So we like to learn that way. Let's move over now to a quick crypto discussion. Then we'll get into the indices and stocks. I just want to bring up crypto because I know I'm convoluted over, like, I love BTC. I think it's the king. I like BTC because it's like the major. And to me, it makes more sense than a lot of the others from the way that I look at it. Now, it has moved the same length as the initial boom. So this is what I said in today's video, and I've mentioned it a few times. They're the same lengths, and I do pay attention to that because the same length takes us into, obviously, the previous resistance. And I feel like this would be a good time for it to consolidate. Remember, in recent weeks, like, let's put this in perspective here for Ty as well. And this is 1, 2, 3, and we're in the 4th week. So basically 3 and a bit weeks, we've popped on 56% onto this crypto. Now, that's a lot of money. That's billions and billions and billions of dollars, as we're all aware. Crypto tends to go on runs. It also tends to, of course, consolidate and allow other coins or altcoins to come through. Now, if it breaks through this resistance, we've got to ask ourselves the question, where's the next level? So let's say we get through 64, 65K. The next level is going to be 70, 75. Every $5,000 chunk will become very important psychologically, and that's really all you can go off. Every 5,000 is going to count. 70,000, 75, 80,000, etc. Am I bullish into the end of the year? Personally, in my own opinion, yeah, I am. But there are a lot of reasons why I think I would prefer to see consolidation here. Any thoughts, Ty? It's guessing, but
yeah. I didn't need to. Here's the funny story. I haven't looked at, and I'm telling you, this is the absolute truth. I have not looked at a Bitcoin chart in 3 weeks. Right. The last time I looked at it, it was in the 40s. So I didn't even have to look at a chart to know that it would have been in the 60s. You know why? Because I had no less than 3 people message me on Facebook who've got nothing to do with trading, just friends on Facebook. Is now a good time to get into crypto. So you just know that people, as soon as they see it running, they feel like they're missing out. And I can't help but think that, the retail traders who haven't traded this before or have been waiting to get in, they're the ones that are going to get kind of caught out at this level if it does, pull back. I think what you said, Thomas, is a good thing for Bitcoin. If it does consolidate between the 55,000 and even now, like say the 63 to 55,000, and consolidates there for a good amount of time, even till the end of the year, I think that would be really, really good and positive for Bitcoin, because it needs to actually own that space. And really, then I think it busts. And you're right. Like every 5,000 is going to provide, some form of resistance, especially as it goes to new highs. But for this to go a lot longer, it needs to find a base. And I think if it found that base between 55,000 and 60, I think it would be really, really good for this moving forward. I mean, who knows where it could go? It could go anywhere, really. Like, but at the same time, you've got to be really, really careful if you're buying it here for the first time. Golly, like, this is a very, very strong resistance zone for it. I'd love to see it consolidate here. I'd love to see it make a $3,000 consolidation for a couple of weeks. Like, hover between 60 and 63. That would be amazing for it.
Yeah, here very, very coil bullish. Here would be cool. And into, let's say it did that to the end of October, because it doesn't do it for long, as we know. It's going to go and sit there for a while. If it does that, then it goes off. Oh man, it would be so sweet. Like, especially November. I mean, you've heard me talk about Thanksgiving. You've heard me talk about the ramp into those kind of events, and that will be a big deal. Move over to Ethereum, similar kind of scenario, struggling with the 4K here for Ethereum, consolidating in between. That is not the worst thing in the world. No. And if we get past that, I actually don't know about these highs, because we've stopped here once and we stop here again. I doubt that acts as much resistance as people think. It tends not to when you get so close to it. We've noticed that. Plus, you've also got this monster inverse concept here through that resistance. So if you take that distance here and we extrapolate that out, that's going to push a 4.5, which is a very solid number, obviously around every 500 bucks basically is a big deal for Ethereum. Yeah. So some good
I think
stuff
Mr. Gideon said in theory Ethereum's going to 100,000. So if Mr. Gideon said that,
I don't kind of disagree with Mr. Gideon. Mr. Gideon, and maybe it's me.
It's the alias.
Mr. Gideon's my alias. Yeah,
it's better than Mr. Tom. Hey, yeah, Mr. Tom.
Mr. Tom. Yeah, I've been called that before. Mr. Tom. Imagine if that person was watching. I loved it when he used to call me Mr. Tom. Mr. Tom.
Someone dead set. In all seriousness, guys.
Hey, you and Mr. Tyrone.
We did it. We did a mentoring student. This is probably, I reckon, 5 years ago now. And he used to literally address us Mr. Tom and Mr. Tyrone, and he was dead set serious. Like, we couldn't help but laugh. Like, we're just like, we thought he was taking the piss, but he wasn't. Because we actually met him in person, and he was literally calling us that in person.
Yeah, it was funny.
It was funny. But he was a nice guy.
He goes, Mr. Tyrone, like that. All right, let's go over to US 500 here. So look, big days. I mean, we obviously had to switch from being a little bit bearish. I was hoping we could get the 4,050. I was really hoping that we'd be able to get that second leg down. It obviously was not to be at this point, and I think that's because we ran out of time into earnings. Now, some people are saying different things. Some people are saying, okay, we're running on low steam. The volume is not there. The volume is okay through this. Let's have a look at the SPY volume, because that's probably going to be more fair. This is most of the trade that goes through. Now, during this whole process, we had decent volume. Since we've gone bullish, we've definitely declined. And we want to look from previous history what happens. So it does slow down This is a little bit lackluster through the last session, though, on volume. And I think some of the reasoning is probably that we're hitting an important area. Firstly, 1, 2, 3, 4, 5 days up. That's quite a lot of days up. We've had more before. We've obviously had more before, but 5 is still a pretty big number, including 3 gaps, Ty. What are your thoughts on the statistics behind that kind of concept?
I mean, I look at it and say, yes, it is definitely looking like it's projecting up and quickly. But 2 things worry me: the volume and the gaps. And probably the thing that worries me the most about that big impulse move is the fact that it's hitting the bottom of that channel. So it's got a lot of work. It's really extended itself straight into a pretty strong channel. That channel has been in place for a long time, and it's right at that level now. So it would take some serious market momentum to push through that on the first hit, especially after 5 big candles and 3 gaps. So it's very, very. I think it's a watch this space for mine. I would be, erring on the side of not so much being long, being cautious of the short, but waiting for that, probably the lightning bolt from this area to break through that channel. I think it has to break back into that channel before we can take it seriously.
I want to see the pullback here. Now we are slightly weak into the open, 0.1% down, 0.05, 5 days up. Bottom end, very serious. This is a serious ascending channel here. Yep. We know it respected it after it pulled up once. 5 days up and it won't respect that again. I mean, come on, we've got to respect.
My feeling is it's going to respect it. Yeah, my feeling is going to respect it. I think it will.
Yeah, I'm sniffing it out, Ty. I'm sniffing it out, but that doesn't mean much. I mean, that's just my spidey senses tingling. Maybe you're tingling as well. But I would like it back down into this level, this 443, 446 on the SPY. Basically, I want it back in my green zone because then we get that dynamic. We've got the cross of the 2050. Yeah.
Oh, and Finken79 says it's not a bad place to take profit. Absolutely, man. That's an awesome place to take profit if you started longing it on the first lightning bolts up. Damn straight it is. That's where I'd be taking it. I wouldn't be aiming for the high. That bottom of that channel would be the first place. Absolutely, it would be. At the very, very least, taking serious partial profits.
Yeah, I think a day trader or a scalper or something that's held it for a little bit longer than usual through this bullishness, they would be considering it here. And we do have some signs in certain stocks in the market. Overall, though, you cannot ignore some of the things that we talk about in the webinars, the Monday Hangout, and obviously the live streams. And that is that rotation is looking much better. So let's just quickly go through this. So back down here, somewhere around this zone here in this green area, I expect some dynamic support. Of course, any pullback, look for smaller time frame lightning bolts, smaller time frame double bottoms, etc. US 100 would be similar. We're looking for it to come back down, ideally to around that 15,000. It's at that resistance, just horizontally. This one, very similar style scenario, lots of bullishness, great lightning bolt. That's why we couldn't ignore it. We don't ignore the lightning bolt. We had to trade it. We had to trade it. We were like, oh, damn, it's done it. But what are you going to do?
I didn't even want to trade it, but we had to.
I harassed you into it.
You got to trade the price action. You have to.
Well, that's exactly right. You've got to do it. Now there are some stocks that are starting to hit, TPs as well. Like we've got here Tesla, obviously earnings at the end of the close. That's going to be. I'm doing the live stream. Come and join us. So Tesla's hit this resistance. I mean, Tyrone, I could show you this chart at any time. And when you've got a ramp like that, and earnings is coming, is that buy the rumor, sell the fact? Does it smell like that?
I think if you look buy the rumor, sell the fact in the dictionary, you'd see a picture of the Tesla chart right now.
You would. I mean, it's very similar to the Apple style scenarios that we talk about where the ramping of the stock happens before the anticipation, the FOMO, it hits a technical resistance. And look, sometimes the earnings will bust it and just be like phenomenal. But if you're a trader, you obviously want to take less risk. And I don't care who you are. Once you start trading serious money, going into an earnings is a stressful situation when you're exposed to a stock because it can move 10, 20% off that earnings. I mean, it is possible. We've seen it before in plenty of stocks, bio all the time. So if you're risked in here, a lot of traders are going to de-risk at key technical resistances. And I think that's why we're seeing that little bit of a pullback. I hope it does well for everyone. I'm not here to freak out anybody. If you have it as an investment, obviously that's a totally different scenario. But traders that got in specifically to make money, some of them will be scaling out or taking profit.
And rightly so. Because I mean, if you're
Yeah.
not taking profit there, where the hell are you going to take profit? If you're not taking profit there, you're not a trader, you're an investor, in my opinion. Like if you're wanting to actually hold that longer, you're actually investing. And there's nothing wrong with that, but you need to know the difference. Because a trader who is actually trading this would be taking profit here. An investor could be looking for the 900, maybe 950, whatever. That's different. That's a very different scenario. But as a trader, traders will be looking at taking profit.
They certainly will.
It's just that's what the market does. Yeah,
that's one of the key things that we look at there. Now, the reason why we think, Tyron and I kind of thinking that, well, at least I'll speak for myself here and see what Ty thinks, that the market is looking better is because when we start to go and look at our sectors, things have broken through what we would call key levels. So we have here the support of the materials index. We talked about it last week. We obviously saw that breakout and that continuation on that's going on. We've got rejection, bullishness, and then all of a sudden, bam, slams out. We look at XLB, we look at XLI, another breakout one. We look at XLV, healthcare, another one that's breaking out, albeit slower and well behind. This is actually behind now the rest of the market, maybe potential opportunities there. But what we've got here is an across the board, not every sector, but most of the main sectors and some big ones are showing us really good looking kind of breakouts. And I can never ignore these because how often on a chart, Ty, is this kind of base wrong with a breakout?
No, and that's a very solid base too. That's a really solid base. There's no question about that. And that's why we just don't ignore we don't ignore the technicals, but we don't rush in either. But when a lot of the key ones are starting to break out, you've got to start paying attention. And I think that, we probably want just a little bit more. We're probably just being a little bit greedy now. We just want a little bit more evidence that this is going to happen. For me, even this one still isn't lightning bolted. But by golly, if it comes back here and if it comes back down and tests that first yellow horizontal line and then busts up and makes a new high, I mean, that's a absolutely solid lightning bolt into that point. Like bang. You can't ignore that.
No, I guess I'm probably not even ignoring the current on these. Like I think
they're solid. They are really, really solid. No question about that. Now,
I think this is the case where we often talk about maybe scaling as well. So we talk about the breakout, we talk about the pullback, and then we talk about that bolt, and then these are potential scales. So we might say, okay, a third. If that's our strategy, that's the worst three ever. But if that's our strategy, then we could see this, we scale in, and we're like Wall Street in many ways in that aspect. We're trying to get positions and we're playing the game as we see the confirmations. And that's why often markets do this. At the point here, retail is at that height. Like Tyron said, people are messaging him, I want to buy Bitcoin, I want to buy Bitcoin, I want to buy Bitcoin. You're usually getting near that resistance. Then it pulls down. Oh my God, sell the Bitcoin. This was a mistake. And then all of a sudden it comes back and they're like, yeah, oh, wow. But by the time they're ready to purchase it, it's already gone too quickly. So just remember that. You've got to put your mindset in what is everyone else doing? What did you used to do? And then you'll find that actually the market makes a lot more sense. So that's a big one there. All right, let's go through some more stocks. So I've got Intel here, Ty. Now this is a very random pick. It's coming into the sweet earnings here later on in the week. I'm not sure what the earnings are going to go, but I don't mind what I'm seeing here on the weekly. We'll see how it ends up with the earnings, but that's a huge consolidation. We've been sitting here for a while. We've got November as a strong seasonal pattern for this. And what do you think of the base here? It's a pick that you probably want to look at after the earnings result. We'll find out what earnings does to it. But imagine if it just closes like here.
Oh, that'd be a wow moment. Yeah, like that. If you get a close above those moving averages on that weekly, golly gosh, that will be very, very, very bullish for it. It could go a long, long way too.
Mm-hmm. A very hated stock getting much better. We've also got pins that we discussed the other day. Let's just quickly have a look at this. This is further off, 16 days away from earnings now. So all that 20 moving average, all of a sudden we get that full closure breakout here. We ramped through the next trade. And yeah, this is one where I think this finally, all this hideous downtrend action, because it was quite technical actually, in terms of it was just like 2 steps down, 1 step back, or not even. It was kind of like 2/3, 1/3, 2/3, or 2/3 almost the whole way, like a snakes and ladders. But it got through, and that's now showing that sign of recovery. It's one of those ones where, again, people practice scaling, but it is there, and hopefully you guys can start to see that. We had Apple breaking out. I'm going to show you the big one.
I'll just answer what I will answer. Biker Dude's question there, because it's a relevant one for the room. So Biker Dude says, how can we be nimble if you are scaling, as scaling takes more time? I can do one or the other, but not both. Okay. It's really simple, actually, when you put it down to what you're looking for, Biker Dude. If you're scalping, you don't scale. If you're swing trading, you can scale. And if you're longer term trading, you can scale. So realistically, if you're scalping absolute scalp mode, there's no scaling in that, mate. Scalp mode is nimble. That's where you're nimble. In, out, in, out, in, out. But if you're swing trading or you're a longer term or medium term investing, if you like, that's when you can scale in. So if you're going for those longer moves, absolutely you can scale, because you don't have to be as nimble. But if you're scalping, there's no scaling into a scalp.
Yeah, I think a lot of these setups, like even this Apple one, this isn't a scalp setup. So you've got here, this is not nimble. I don't think you need to necessarily be nimble on this type of setup. This is a closure above significant moving averages. When we're talking about being nimble, more on the indices, and that's more to do.
And nimble is generally a counter trend in truth. You don't want to be scaling into a counter trend. Does that make sense, Biker Dude? Could you make sense what I just said? Hopefully
it does. So Apple here, earnings off 8 days. We talked about buy the rumor, sell the fact. We've got a 150 here at the end of the week being a key level. I would like Apple. I would love Apple, in fact, to just give us a little tasty. Why not just give us a 145 again? Why not? Why not, Apple? Come on. Just come back to 145. Give us the action here at the 20 and the 50, and then we can move. In. So yeah, he says yes, that is what he's been doing, scalping, etc. Right. Perfect. Yeah. So generally we say nimble. We bring the nimble wording in when the VIX gets high. Currently the VIX is down back under 16. So it's kind of like, now it's just if you're scalping, and then of course you could be nimble. But in general, a lot of the fear is currently out of the market. So we're looking. You start looking more at your bigger trends.
Nothing to see here, says the VIX.
Yeah, absolutely. So look, with Apple, we would love to see a ramp here coming into the earnings. A lot of this will probably come down to maybe even the Tesla result, but I like it. I love that 145 now. I like the closure, the day trade was significant. The 150 is a significant level. We bust that. We go back to 156. There's good $5 chunks here. I like it a lot. But I think the most interesting one at the moment, Ty, is Amazon, because of seasonality in November. Now, here, bear with me here. Would we agree that this is certainly a 4-hour lightning bolt?
Yes.
Yes. So we've closed above the 4-hour lightning bolt. But the thing is, I like trades within trades. And I was talking to the group about this on Monday, and I want your opinion on it as well. And I see this as a trade where it's going to go into this resistance, but once it gets through, it's got a lot more potential, because this is a trade within a trade, and it's got that monster capability of getting close to that 4K level. It's got strong seasonality in November. I think the stat, if you pull it in the room, was something like 70 or 80% for that month in terms of positive. That's a very significant month of positivity. And if we get what we expect, which is people buying stuff before Christmas. Are you buying stuff before Christmas, Ty?
Oh, yeah.
Are you buying early this year?
Absolutely. I have to. Because I've got birthdays that I've got to take care of before Christmas as well. And apparently the supply chains are killing us. So we have to get the presents early.
Yeah. So
100%. So November's going to be you'd have to think November's going to be massive.
I think they're going to have good guidance.
Yeah.
I hope.
Yep. I really like the technicals on Amazon. I think they're good.
Yeah, but also, the thing that's crazy about it, it's one of the biggest stocks in the market. And this thing's trading at the same price it was in July 20. So July 20 to now, it's done zero. Zero.
Yeah. And just to give you some context, Thomas is whispering and talking a little bit quietly because he's afraid that Kathy Wood's actually listening in, and he's worried it's going to actually go in and screw up the trade. So that's the only reason I can think of that he's kind of whispering into a microphone. It's that you went all quiet on us for a little bit, and you were kind of talking quiet.
That's the mic. I'm not whispering. No, I'm screaming in.
I do laugh at my own jokes a lot.
I have no idea what you're talking about. All right, so over here on the left, Ty, get back to it. We got to get back to it. We have no gains since July into August last year. So to me, that's pretty bad investing. And this could be finally the thing. We had Netflix that broke out a little while ago. We go back, and I mentioned this morning, but we had Netflix. Where the hell is it? That suddenly cracked a high. We had Nvidia that cracked a high, and Netflix got its thing. Now, obviously, earnings, it was a buy the rumor, sell the fact. The stupid thing went in, hit our technical profit today. After earnings, 2.58% down. No one would have expected that because they're thinking, Squid Game or something. It did well, but the price action already put it in.
But look at that retest. Look at that retest on the weekly. God save us.
I know. I'm hoping we get that kind of action off Netflix. You should never. So if you are in a trade like this and it comes down and does this, celebrate.
That's
not many TA traders will celebrate. You can celebrate, and you might think, why the hell would I celebrate being down from over here or being at the same entry price? Because you're seeing it about to get to what you want. Yeah.
I could do. That's your swing trade. Bang, right there. Scale in again. Go again. Load. Double down. Triple down.
Oh, God. General advice only. Educational, whatever content. Please do not take anything into consideration that Tyrone just said. So look, we've got 50 exponential moving average. We've got a strong weekly. We've got a beautiful closure. We've got a trade within a trade. It's not that often you see these types of things. And look, are they playing the stats? Of course. But it's just one of those things that will continue to follow through the next couple of weeks. And I thought it was a great place for us to wrap up today's session, Ty, because we've got quality stocks doing quality things. Obviously, there's plenty of opportunity still in the market. Some people will say, well, I've missed everything. I mean, there are some kind of sick puppies in there, and that's things like the Facebooks and stuff of the world, the pins, the hyper stocks that have been beaten, the evil T-Docs. There are some that are coming back up. And again, we kind of expect, at least from a technical standpoint, the market should take a breather here, although minimal. I hope it does.
Yeah, no, I agree. FX Russ has a quick question. Do we need a proportionate time level confirmation based on the lightning bolt? So a weekly lightning bolt needs a 4-hour daily confirmation. Look, the problem with a weekly lightning bolt, a bit similar to what we were talking about in terms of bigger long-term trends, is it's difficult to actually isolate which time frame is the best to actually trade in it. Now, you'd have to be trading a daily trend on a weekly lightning bolt to actually get any effect whatsoever. 4 hours just way too short. So the lightning bolt is proportionate, but realistically, you want to keep the lightning bolt. I'm not sure if you have done the ELD 363 FX for us. That's where we use the lightning bolt in the same fashion. So the lightning bolt needs to be within the 363 parameters. So that's where we get the verification from. So if it's a lightning bolt on, say, a daily, it needs to have movement on the 3 to 6 either side of that. So we use that as a general guide. And that's a really good guide because it means the candles inside that time frame are going to be very, very relevant to that lightning bolt.
Yeah. So the 363 is in the Presic.
Obviously.
All right. Well, last one we'll finish up here, Ty, and then we'll just have a couple of quick announcements. So we've got Dkng stuck within a channel. I like the range. Obviously, I would prefer it breaks out for a few people in the rooms just because I know they're bullish this thing, but it is trapped daily, very much so, looking for a 51 plus closure out. And then, of course, hopefully you get that ramp, but you don't want it underneath here. No underneath here. That would make you sad. All of a sudden, you're back at 44 without blinking. So, yeah, it's in a channel. You can go and slice and dice it on a 4 hour, or any time frame really. You see here 4 hours very solid as well. Long leg doji in the previous session, a low and a high. Closure out is the key here for Dkng. So I've got a couple of quick announcements, Ty, I just want to mention. Number one, again, if you see some kind of weird scammer or something in the Discord community, just immediately tag myself or the admins. So just tag both of us at admin or at Tom or at Ty. We'll deal with the nasty people because we want to make sure the community is clean and safe as much as possible. And they are prevalent across all channels at the moment. I've seen them. We do pay for anti-hack stuff or whatever you want to call it on YouTube. But there's so much that comes through. So it does its best to, it's just a neural network, Ty. That's how it protects us.
We have a robot that we pay for that actually cleans up. Sam, how many did it actually delete, Tom? Did you say last week alone? Was it like 5,000 or something? Some ridiculous
5,797 comments. I've got it up here. Yeah.
Look at that.
So you can see here
5,797. That's incredible, isn't it?
Yeah,
that's
2.4 days of time saved manually deleting. So it's a real problem here on, this is Kill Spam. I don't mind giving him a shout out. But basically, he's made his own tool that admittedly he has to charge for. Fair enough. And he's doing a better job than YouTube is in terms of removing these things. So hopefully there's a few big channels in the stock space that use this guy. So hopefully it continues to help us out. The other thing that I want to mention, Ty, is I believe we've got 2 slots left on the mentoring. So they are filling up fast. Obviously, there's a few more days until the November split happens. If you're interested in it, I'm telling you, we've got a banger of a mentoring course. Yeah. And
they are the last 2 for 2021. That's it. Definitely, there's no more starting in 2021. So they are definitely the last 2 spots. So before we've had, I reckon, Biker Dude, he nearly got spammed by the spammer bot. He's asked for Beto ETF so many times. So let's do it for him before the robot actually cuts him.
This is the Bitcoin ETF. I haven't.
Yeah. And thank you, Steve Stradamus. I like your name as much as you like this channel, man. That is that's a very, very cool name. Steve Stradamus.
There is a reason I'm not looking at Beto too much, Ty. It's a Bitcoin ETF. And the problem is, what can I say about it from a TA perspective? It's got 1-day trade. Look, it's exciting to see. I guess I can talk about it from a broad standpoint. It's obviously exciting to see these ETFs come out. I believe this is just Bitcoin. I don't know if it's a Bitcoin strategy or if it's just Bitcoin itself. I can't comment on that. I haven't looked into it. But look, the more ETFs, the more that hit the mainstream, the more money that will flow into, of course, the crypto market. And in general, that is a good thing for the coins themselves. It's just common sense. If you allow more people access to something or access to a market, then more people will do it. A lot of people aren't going to go open up weird share trading accounts or weird accounts online. And some of them are damn weird to buy certain coins. So, realistically, if you get access through your normal broker, there's a lot more money in stock, as we know. So if people have access to this, maybe they'll put in 1% of their portfolio. Maybe their advisor will say, oh, hey, maybe we should put that as an alternative. I don't know. But the point is, it's a positive for the markets. From this particular one, though, there's nothing. I mean, TA-wise, I don't know what it follows. I'd have to look at the underlying. And if it's just Bitcoin, then you just look at the Bitcoin chart and it should trade within it.
It's hard to see what it's actually based on, really, isn't it? Like it's hard to... A Bitcoin strategy could be anything.
I think it's just Bitcoin creation. Like they just buy it and hold it. I'm not too sure. And Green Thought says, what do you think of Disney? Let's have a look at Disney's close. Disney's at the bottom of the range. I think it's in a range. If you like Disney for whatever reason into the earnings, 21 days away, this is what we would call a support. You have a middle range here, which is that 180. So a 180 plus closure, you would think it's going to 186. There could be a day trade opportunity in there. And any weakness underneath this level will be obviously incredibly bad. Stuck in a range at the bottom of the base. If you like buying base, then yeah, you're right there. But you've got to be warned. There's earnings coming up. That's going to be the lynch either way. That's nothing much I can say. It's on support.
Exactly right. Monica, I know you're out there. Thank you for noticing my haircut. I appreciate that. I was actually going to get it cut on Thursday, but I thought, you know what? I know Monica's going to be there on the Wednesday webinar. I'm going to make a special effort to get it cut and see if she notices.
My God.
Look at that. right on cue. we do appreciate, guys, in all seriousness, we appreciate each and every one of your support. And yeah, absolutely. Thank you for joining us on these Wednesday night webinars. I know it's early in some places, it's very late in others. Unfortunately, we can't tailor to every single time frame, but we do the best we can. And we do really appreciate you all making the effort to come every week. And don't forget, of course, the replay is available for if you do happen to miss it. Definitely jump into the replay. It's available pretty much straight away these days. Isn't it on the same link? All you got to do is click the same link, and the replay pretty much comes
you
up.
can watch this replay comes up. Make sure you subscribe to this channel. You'll see it instantaneously. It's also going to be posted, obviously, in the Discord community under Wednesday webinar. I'll chuck it in there in a second. We'll see you for the close tomorrow, guys. Remember, mentoring 2 slots left. If you're from Europe, we've got a slot for you. America, we've got a slot for you. And obviously, Australia, we got the time around it. So join us, guys. It's going to be good. And if you want to take to the next level, it certainly helps out. All right, we'll see you next Wednesday. Otherwise, we'll see you in the rooms. We'll see you online. And thanks so much for subscribing and following the channel. We do appreciate you very much. Bye for now.
Thanks, everyone. See ya.